Good evening, folks. This is Andy Pedraza with Special Effects Academy. We're on the start of the week session in the Forex trading room for December 6th of 2020. We'll be going through our standard agenda. I'll look at the prior week's results, our currency strength meter for the week and month, fundamental announcements scheduled for this week, a look at the major pairs on the daily charts, any setups we see in progress, and a few words in conclusion. Starting with the long-term, it was a basically flat week. We had one or two trades close against. Actually, I think the bigger one was last week, the week before. Anyway, we had one or two close against, but essentially the account is flat for the week, and we've got trades open, at least one of them carrying a sizable chunk of open profit. So all in all, with the profit that's already been protected, taken into account, we are significantly more positive on the percentage than it shows on the screen. Intermediate term ledger, pretty much the same story. Couple of trades closing against, open trades carrying profit, the account carrying an open profit last time I checked it on Friday. So while it's flat, it is looking positive right now. And short-term ledger, we did have a drawdown this week. It was a very volatile week, so we had a little bit more losers than winners, or we had a few winners as well, but not enough to make up for it. So again, short-term account will be more subject to volatility than the other accounts. Notes and opportunities for improvement. As I mentioned, a highly volatile week. The USD is at multi-year lows right now. Brexit is rounding the last curve, making its last lap. They need to have an agreement ironed out pretty much this week if they're going to meet the deadline at the end of the year. We all know that the final couple of weeks in December are dead. So there's not much chance for a deal to be ironed out. That being said, all the noise coming out of Whitechapel and Brussels seem to be indicating that there is a good chance of some sort of agreement being reached in the course of the week, maybe in the course of today. I haven't checked the news today. I know the negotiators were working through the weekend trying to hammer out the final details. It looks like they're stuck on fishing grounds, fishing rights, whatever you want to call them, in UK waters for the European Union. And that seemed to have been the major sticking point for a while now. U.S. stock markets continue at all-time highs. Commodities such as oil, silver, and gold continue to overperform. That is extremely rare to have those two things happening at the same time. Usually when the stock market is rising like there's no tomorrow, commodities will fall because most of the money is plunging into the stock market. The fact that it hasn't happened right now in this situation is telling me that a lot of the big investors are hedging their bets while they're still in the stock market, because if it's going up, why not be in it? At the same time, they are moving money into the commodities, especially silver and gold, as a hedge. Or maybe you have one group of investors very bullish on the stock market and another, and in my opinion, slightly smarter set of investors pulling money out of the stock market and moving it into commodities. Either way, this is not normal, and the likelihood of some sort of correction in the stock market is a lot bigger than for it to keep going up. And it is going to be a very atypical December. Usually December is a dead zone for trading, not a whole lot going on. This December, however, we have seen volatility that usually is never seen towards the end of the year. And this is not the first year it's happened. Last year, we had a lot of stock market activity, but it was in the other direction. The stock market made a huge, about 20% correction last year. It did come back, but December was basically a monumental crash in the stock market. This year, we're seeing a lot of movement, but in the opposite direction. So again, I'm not sure how long that's going to last, and take that with a grain of salt. I'm not trying to tell you what to do. I'm just trying to tell you be very, very cautious in your investing and in your trading in this December that is very unlike the normal December we're used to. Moving on to our relative strength meter for the week and month, if I may direct your attention to the rightmost columns. And I would like to focus first on the metals, gold and silver, all the way at the bottom. You can see that in 1 week, silver has gone up close to 7%. Silver had a very bad November. It went down about 4% in change, I think, for the month of November. Well, in 1 week, it's undone all the retracement and added some to it. So silver had the best week it's had in quite a while. Gold did not have as good a week, but still it is up 3.5% for the month. That's still a monumental move. It doesn't undo the retracement in November, but it did come quite close to it. So gold is now again getting very close to its previous high. And again, with the volatility and the hedging that I see going on, there's every chance that the metals will continue to overperform. On the currency front, again, we've got only 1 week of data for the month to look at. A lot of the big movers were the euro pairs, in particular the euro dollar, 1.64% up. The euro against the dollar, and this is something you will see in most of the dollar pairs. You'll see this 1% plus move in the last week. The dollar is plunging. In cases where it didn't move as much, it was because we had a Friday retrace or because something else is going on, such as Brexit for the UK. So the pound dollar is slightly below 1% up, and Kiwi dollar was the bigger retrace on Friday, so it managed to only go up 0.38% in what we've done of the month so far, but still, it is going up. All of the dollar pairs are moving into dollar weakness. USD CAD did 1.68%, USD Swiss 1.78%, and so on and so forth. So I don't see that changing anytime soon. The situation in the US is definitely not, it doesn't look like it's going to be beneficial for the dollar in any sort of situation. That could change. The market could fall in love with Biden. It's happened before, but the way things are playing out right now, I see a continued dollar plunge at least throughout 2021, maybe even beyond, maybe even covering the entire Biden presidency, assuming there is a Biden presidency. That is also not too clear yet. But again, the market is very fickle and the market can change at any moment. So all we can do is trade it week by week. But that's my opinion this week. Fundamental announcement scheduled. We've got a couple of interest rate decisions. That's pretty much the only thing of note on the calendar. We've got the Bank of Canada's interest rate decision Wednesday at 10 a.m. So we'll be trading that one live. And then Thursday early morning, that is Thursday at 7:45 a.m., we have the European Central Bank's interest rate decision. So those are the only tradable events we're going to be having this week. We do have a European Central Bank monetary policy statement and press conference coming out after that rate decision. It's coming out 45 minutes after. I normally don't stick around for those. We'll see. I'll play that one by ear on Thursday morning, but officially we'll only be trading the two rate decisions on Wednesday and Thursday. With that, we move on to the charts. Start commodities. So oil, we have oil continuing to make slightly higher highs. It didn't move much for the week. It was flat for the bulk of the week. And then after dipping close to the end on Friday, it just went up and broke out yet again. So it ended up trading a little bit over 45, maybe even 46, which is the highest it's been since back in March before the collapse. So we are starting to get back into pre-COVID territory. That is very, very impressive. The crash took a long while. The recovery was even longer, and it went flat for quite a long time. It is finally breaking out. And again, this is concern in the market for what may come out of a Biden presidency, especially regarding taxes and surcharges on fossil fuels, global warming bullshit. Sorry, I got to call it that at this point, and similar situations that might affect the price of crude. So the market is starting to stage a bit of a rally on oil. Not sure how long it's going to last. Not sure if it will last. It just as easily go back down. But for now, it looks like we have a breakout. And as far as I'm concerned, all of these breakouts are definitely tradable events. Moving on to the currencies, and speaking of breakouts, euro dollar broke out yet again this week. It was almost an entirely bullish week, a little bit of a retrace on Friday, but not a deep one. And we have the euro at the highest price against the dollar in quite a while, certainly beyond the scope of the chart right now. It is at a multi-year high. So if things continue the way they are, the next target is going to be on the weekly chart, and it is hundreds of pips away. So we're already trading this, and we'll be looking to trade it as long as that trend lasts. Pound dollar, same thing, did a bit of a breakout on Thursday and Friday, but retraced on both days, ending right below resistance. It is poised for a breakout. And if we have any sort of good news or even not too bad news coming out of Brexit, this might be the breakout of all breakouts. And again, to see higher highs, we pretty much have to go back to before the Brexit vote, when the pound was trading at about $1.50 US dollars per pound. Currently, it's 1,500 pips below that. So I'm not saying it's going to go back all the way up there, but certainly it's probably going to rally somewhere into the 140s initially. Where it goes after that, your guess is as good as mine. USD/JPY breaking out of its most recent level of support around the 104.50. It's not the first breakout we've seen. It's tested it. It's actually broken above quite a few times, but it does look like there's nothing pushing it up anymore. We're poised for that break I've been expecting for years now, to take the yen back to 100 yen per dollar, which is about 400 pips below current price. And again, we're seeing these breakouts on pretty much all the dollar pairs. USD Canadian, no exception. Breakout this week, finally killed the bottom at 129 and went all the way down to 127.5. We captured a good chunk of those pips on the intermediate term account. Indeed, it is one of our open trades, carrying close to 150 pips of profit as the week closed. We'll be continuing to carry that trade and see where it takes us, again, assuming dollar weakness does continue. USD Swiss, another breakout, clearing the previous bottom at 89 and going not too far, a little bit less than 100 pips below that, but still a breakout is a breakout. And given the dollar weakness, this might go on even further, especially taking into account that the Swiss franc is one of the safe haven currencies. Aussie dollar breakout. Are you getting the pattern here, guys? Breakout from the top. It made higher highs, finally broke the previous high by a small amount, previous high from back in August, and is now, I guess, gathering momentum to see if it can break out into the weekly levels of resistance. All the daily levels of resistance have been taken out. Kiwi dollar, same thing. And this was the only heavy retrace we saw throughout the week. It made a higher high on Thursday, way, way further than every previous high we have on the chart. So that breakout happened. This was the first dollar pair to break out. It broke out back in October and never stopped. So it made an even higher high, and it did do a bit of a retrace Thursday into Friday. Not too deep, but still enough to put it back below the resistance at the 70.50. I think, or at least my opinion is, that this will continue going up. We do have an open trade in the long-term account, carrying in excess of 100 pips of profit, and in excess of 100 of those pips already protected. So we will continue to shepherd that trade and see how far it will take us. That is the end of the dollar pairs. Moving on to the Aussie CAD, it is still in the sideways range. Was trying to attack resistance for weeks now and finally plummeted. It's closer to support now than to resistance, but still well inside its sideways channel. So we're still waiting for a breakout in either direction. Euro Swiss is still acting very erratic. It went up to the topmost level of resistance twice in the last couple or 3 weeks, and then all the way back down to the next level of support. It's not a big mover. There's barely 100, maybe 200 pips in that sideways channel from the very top down to the stronger level of support near the middle of the chart. So even when it bounces, it's not that big of a move, and it does take weeks to play out. So we've not been trading this one for a while now. But if it does break out, that could change. Euro pound hit support, bounced off of it. It of I think a small winning trade at some point, and we tagged on a loser trying to trade it back down. But it has broken out above the trend lines, hit the bottom of the cloud. Looks like it's dropping again, but I did put a pause on the euro pound. We'll wait for a better opportunity to trade it, probably once there is some sort of Brexit decision coming out, which would give the euro pound some direction for weeks, maybe even months to come. So that'll be the beginning of a longer trade. Euro JPY close to the top of the chart, which of course is going to be major resistance. I do think that the euro is a bit overvalued against the yen. So while I'm not normally a contrarian, I am looking for the opportunity here to trade it back down. Of course, if it does clear the top of the chart, then I go back to what I normally am, a trend follower, and I will trade it up. So I'm not married to a direction on this pair, simply waiting to see which way it bounces. Euro Canadian also trapped in a sideways pattern with a big drop this week after an even bigger drop at the beginning of the week. So basically, Tuesday, Wednesday, and Thursday, it went all the way up from support to resistance. And then that same Thursday and into Friday, it dropped all the way back down to support. So not doing much of anything. Looks like the CAD is getting a bit of a boost from rising oil prices or something else going on, other than the labor report that we saw come out this week, which was good for the CAD, but that alone I don't think would explain the Canadian strength. Your economy is very small, so the labor report, while I agree it's important, really doesn't explain. But then the market is not rational either, so you never know what the market is reading into any of these reports or movements in the economy. Either way, this one is sideways, and we're waiting for a break of resistance or support. Don't care which, but my opinion is support break and a movement down is far more likely. Pound JPY, we are trading it up, and I think we were a few pips ahead as the week ended. It looks like it is following the support of that trend line and continuing to rise. And we do intend to track that one towards the top of the chart, assuming the pound and the yen both cooperate. Aussie JPY, I guess we can say it broke resistance and is slightly above its previous sideways range, but not by much. And it is very close to the top of the chart. While I am very bullish on the Aussie right now, I'm also bullish on the yen. So this one could remain sideways, or one or the other currency could gain the upper hand and make a breakout in either direction. So stay tuned for that. I'll not be trading this one until I see a little bit more action from it. Euro New Zealand, at this point, we are trying to trade it down after it bounced off of resistance, and it does look like it's still following that trend line down. We're not looking for much, looking for a quick trip to support at the bottom, and we get out. That's about all you can say about this one, but it did break support. That's the key takeaway, and it tested support. That's the second key takeaway, and now we're waiting for it to give us a lower low, assuming it does go in that direction. Pound Canadian is very erratic. I think there is a lot more upside to the pound than to the CAD, but that's just my opinion. It's still in a sideways channel after a very brief breakout. This is one that I think we would be far more, or it would be far more beneficial for us to trade it up I think it has more upside than downside. And indeed, we already have an open trade opened late last week on the intermediate term account. I think the chances of some sort of not too bad or at least, or maybe even good Brexit outcome for the UK will make all the pound pairs move into pound strength temporarily for a longer period of time. No idea, but we don't need it to be a long period of time. We just need to get our profit on the initial move. If it does end up going even further, so be it, even more profit. But I think the downside is quite limited on all of these pound pairs. Pound Swiss, same thing. It did hit support, resistance a couple of weeks back. Then this past week, it hit support. It's still in the sideways channel. It's in the upper half of a wider sideways channel. So long as that support holds where it is in the middle of the channel, it's just a matter of time before it breaks out towards the top again, assuming, as I said, that there is some sort of positive news coming out for the UK. And last but not least, the pound Aussie also in a sideways channel, and I think overdue for a test of resistance. Another one we're trading in that direction, and we will continue to do that as long as it does continue to stay sideways and respect support. That is the end of our chart setups we see in progress as the week begins. The pound pairs, of course, we have that Brexit deadline, and it is very close to a breakout against the dollar. The dollar pairs, the U.S. election fallout, massive USD weakness so far, and probably more to come. Kiwi pairs, it was the earliest breakout against the dollar and shows no sign of stopping. The Swiss pairs are also breaking out against the dollar, and the Euro pairs broke out against the dollar. So pretty much on all of them, we do have the dollar weakness playing into some very good trading opportunities. And last but not least, a few words in conclusion, contrarian versus trend following. And I point this out because we are having these very significant breakouts on multiple pairs. Right now, a contrarian trader would be going long on the dollar. They would be attempting to trade the retracements. And that works sometimes. It just doesn't work often enough. Me, I'm a trend follower and I'm shorting the dollar like there's no tomorrow. Why? Because that is the higher odd trade. The likelihood of something that is going up continuing to go up or something that is going down continuing to go down are far higher most of the time than a turnaround. I'm also long on the pound, albeit for different reasons. Now, sometimes contrarians are going to be right. Nothing goes up forever. Eventually, whatever's going up is going to turn around and head in the opposite direction. So contrarians sometimes are going to be right and make a ton of money. When I'm wrong, I'm going to lose a little bit of money because I don't get married to a position and ride it all the way in the opposite direction. But when contrarians are right, you tend to hear them a lot on the news because it just shocks everybody. The entire market was bullish, and this one guy decided he was going to short the market, and boy, did he make a few billion out of it. Yeah, it is a sexy story. So you're going to see a lot of contrarian traders overrepresented in the trade publications, in the news, in the books, this, that, and the other. However, trend followers are going to be making money a lot more often and a lot more steadily, but it's just not as sexy. So you're not going to get as much news coverage out of it. Now, there's nothing wrong with either way of trading. I know contrarians who make a lot of money and trend followers who make a lot of money. It's just different styles of trading. I personally think it's easier to be a trend follower than a contrarian, but even I will now and then go contrarian. I do prefer trend following, however, so take that as you will. Those are my final words. Any comments or questions from anyone before we drop off? Okay, then we'll be back as usual this week for those of you who are subscribers, and the rest of you, I will see you next Sunday. Have a great rest of a weekend.